The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. Hope everyone had a great night, safe night, and, of course, let's make it a great day. Dow right now is up 31. Nasdaq's up 6. S&Ps are up 3.5. We get gold up 7. Platinum's down 5. Bonds are off 20. And look at King Dollar. They can't do anything.
No, I was going to say the market's got it wrong unless they're going to put the king to bed here for a bit,
folks.
Because it's not resting.
It's not resting, man. I mean, they tried to get King Dollar down yesterday, couldn't get it down.
Yeah.
King Dollar tried to get it down this morning. It's only up 12 ticks. But the key here to understand, folks, is that the driving force, okay, in all the markets is King Dollar.
Oh, absolutely.
King Dollar. Yeah. Is not only moving, but it's moving in spades. In fact, there's okay, so today, in front page of the Wall Street Journal.
Yeah.
So check this out.
Yes.
Front page of the Wall, which we know because we're in the real estate business in Florida right now. But listen to this, folks, okay? Foreigners snapping up properties in the U.S. Okay, so listen to this.
Yeah.
And the amount of bread that's coming in is astronomical. And the bread is coming in from South America. It's coming in from Canada. It's coming in from the United Kingdom. Most of it in Florida, folks, is coming in from South America. But what this article talks about is, number one, in South America, okay, so if you have a lot of money, folks, what ends up happening is this. It's like, and this is a great problem to have, but where do you put it?
Oh, yeah.
Where do you put it?
That's right.
Are you going to give it to a bank? You're going to put it in Chavez's bank? Forget it, man. He's going to take it, right?
Yeah, that's right.
And when we talk about Venezuela, this is going to get pretty cool, too, folks, is that the deal down there is that there looks like a young guy that's going to take him out this time.
Really?
Yeah.
Oh,
yeah.
wow.
And if that happens, you're going to see Venezuela basically make its way back. And I remember Venezuela.
No more 35 cent a gallon gas?
Well, no, you could have that, but what the difference is that he absolutely went after private business.
Okay.
But I remember when he did it. He did it because I had some business associates that came to Boston in 1994.
Okay.
And were telling me that they were leaving now and they were taking all their assets in 94 because that's when this happened.
Oh, that's pretty
And they
cool.
were explaining it to me.
Cool.
And then it came down like beyond belief.
Yeah.
So 94, 2004, so, oh my God, see, that's almost 18 years.
Yeah.
That's almost 18 years.
Yeah. That's intense. But I mean, look, we've been talking about it, and you want to be able to put, your strong asset right now into what will be another strong asset.
Well,
it's weak rate. It's taking the shorts, but in a good way. Well,
and what's happening, so they're taking their currency, buying real estate, and this article here is basically about New York and about Florida, and what they have a currency trade there.
Yes.
And they're buying a hard asset.
Yeah. And that's what we talked about. Just folks in Japan, if they could take with the strength of the yen out there, which is, it's not going to stay at these levels,
right? And
you took the strength of that and you bought a real estate. You're getting a double.
Well, and
banger.
Folks, watch how this is working. In Florida right now, what it's working is this. Okay, it costs from $175 a foot to $225 to build.
Yeah.
Well, bottom line is that you can get them at about $48 to $53 a foot.
That's nice.
Yeah. Insane. And if you happen to be an accredited investor and you want information about the Tiger Fund, you can email Kathleen at TFNN or Tiger Fund at TFNN.
Yeah, that's cool. What better time? We had some clients in yesterday, with Tiger Metal Exchange.
Yes.
And we're just simply talking about, our kids and the age that they're at. And, can you ever think of a better time for, kids, people just starting out true affordability.
Yes, I know.
To be able to get into real estate, to be able to finance it at the rates that they've got right now.
That's right.
They got to have a decent down payment, have a job.
Right.
Actually, I don't even know if you even need that these days.
No,
but the reality is, what better time, Compared to years ago, you would have thought, man, it was totally untouchable for your kids.
Right. And it's not. It's not even close.
No.
And in fact, the bottom line, folks, is that buying is less expensive than renting.
Exactly.
In a big way. In a big way.
Yeah, and you're going to absolutely get some appreciation. It's not, doesn't happen overnight.
No. But bottom line, let me tell you something. No matter how you feel about the markets, okay, inflation itself will go at least 2% a year. I mean, the Fed will tell you it's going to go 2% a year. Just 2% a year itself, okay, is a big deal.
Yeah. Yeah.
Because over the course of 5, 6, 7 years, it's huge.
Yes.
And when you're buying them under them, what you can build them for, it's a whole different ballgame.
Yeah.
So market-wise, folks, when we started, the market was up, slightly now. Basically, S&Ps are up $3. What that's all about is that Finch just come out and downgraded 18 Spanish banks. Well, you know what's amazing? Why don't we go downgrade or upgrade some banks, okay? The bottom line is that if you wait for any of these rating agencies to upgrade or downgrade anything, you might as well just give it up.
Yeah.
I mean, they're all broke.
Yeah.
But it hit the market. So it's
I thought it was kind of interesting yesterday. A lot of times I'll either have music on in the background or I might have CNBC or something on the background. And I noticed yesterday, just caught a few minutes of it, and they were starting to talk about what might happen over in Greece.
Okay.
What might happen, if them getting out of the euro, going to the drachma.
Right.
But it was almost as if they were cycling through, the run on the banks that was over there.
That's right.
I was actually kind of amazed, more so that, that CNBC actually would be putting that out there.
Yeah, well, no, I'm with you. I'm with you.
Because not necessarily that they were maybe showing that right there over in Greece or what have you, but let's face it, they show it around the world.
They weren't doing it on purpose.
Yeah,
yeah.
I was kind of like, wow, what?
The thing that's wild, folks, is this. Well, what is terrible? So picture this for a second. There's no FDIC insurance.
Yeah,
in Europe.
Right, exactly,
okay?
Exactly.
So picture this: would you keep your money in any bank?
Yes.
These people in Europe are so brainwashed. Okay, it is like sick. It's getting less so and less so, but they're still like insane keeping their money in those banks.
Yeah.
I mean, I'll tell you flat out: if you have money in a European bank over there, folks, just get it out.
Yeah.
Why?
Yeah.
Why do that?
Yeah.
All you have to do is transfer it into an American bank and you're covered.
Yeah.
Oh, really?
Yeah.
Oh no! Hold it. Let me leave my money in some other bank that I'm going to believe a politician is not going to basically take it.
Yeah. No, for sure.
It's troublesome.
It was kind of interesting because what most folks don't necessarily understand. Because of being in the business, is that you take a look at CNBC. One of the reasons why they're always taking more of a bullish slant on things. Okay,
right.
Is because folks, what they need to be able to do is they need to be able to sell programming, and they got to be positive about that.
Right.
And so that's always going to be their kind of slant out there.
Right. No doubt.
They got to be able to. Whereas here, we're giving you the slant is what's currently going on in the marketplace.
Right.
Has nothing to do with the advertisers and what we do. So that's why it was so unusual yesterday to actually see them going with that story. And I saw them doing it, for quite a bit during the day yesterday.
Wow. The bottom line, and you're so right, because picture when I first started this, right? Because I'm always trading, I'm saying, well, it's going up, it's going down, and this is what it does.
That's right.
And then, I'm in it for about 3 years, and I'm realizing, man, wow, geez, if I was always a bull, I'd really make a lot of money because we're selling product, folks. That's the bottom line. So picture this: when it gets bearish out, okay, the key is always like, oh man, here we go, okay, because even though folks may want to go short and may want to sell the market, the bottom line is that the market has brainwashed the populace across the world, not just the United States, that there's only one way to go on the market. Give me your money and keep it, and that's it.
Yeah.
So the thing that's really intriguing is that, of course, then I had to just make an out-and-out decision that, well, this is the way it's going to be.
Yeah.
When I know if I ever did stay bullish, I could double the income in 2 seconds, okay? And you'd be wrong. You'd be wrong in the downdraft, but it wouldn't matter. I could still double the income.
Right.
But so check this out, because this is pretty cool. What ends up happening is that doing it the way we do it, we actually more than double or triple our own income. And this is why. I saw the statistic.
Okay.
Listen to this. This is pretty cool.
Okay.
This just came out yesterday, folks. In the downdraft from 2007 to 2009,
the
average household went down 38%.
Okay.
Wealth.
Sure. Yeah.
Okay. Well, the O'Brien household didn't go down.
Yeah, I understand.
Okay. Now, even in that context, it might not have gone up because we do have real estate. Okay, so we didn't sell it, but we have it. Okay.
Sure.
But cash-wise,
that's right.
Whoop.
No, absolutely.
Okay. But isn't that interesting? Do you know what I mean? So it's like now when that happens, what does that mean? That means that you also have other opportunities that other people don't have. Well, because you have cash.
Well, you
know
do
what I mean?
That. But also, I think there's another element of it that is that intangible that is a mental aspect. Because the folks that actually wrote it down, that fear all the way, every morning you're waking up, what should I do, what should I do, what should I do, and you don't do anything.
Right.
And then finally, people will reach some sort of pain level on the way down.
Right.
Get out, say, I'm never going to do this again. And that's really the wrong approach. I think that's the even larger cost out there, which was why I put together that special report. Because, we got to a point where I said, look, we realize that, 70+% of the people that are listening here, have a non-self-directed retirement account.
Right.
And it's those folks that, as I flew around the country between 2000, 2007, 2009, because I had stores, all over the place, what really got me was all of these great people, all these great service people, whether it be teachers, firefighters, policemen, whoever it was. Or you work for a private company.
Sure.
But just simply, you could see when you were talking about the market with them, the fear, they didn't know what to do, they didn't do anything.
Right.
And I just wanted to be able to share with folks a report that said, if you just do this, just go back, just take it, just make it simple. You don't have to trade like we trade.
That's right. No.
Okay.
But you can take your cash.
But you can take your there's nothing
absolutely.
And when you do that, and you just use, you're not going to sell the top, you're not going to buy at the bottom.
But you got to get the cash.
Yeah, and that's the psychology aspect of that.
Right, it's huge.
Ooh. Because then you come back into the market because you're like, hey, this worked pretty good. Now let me come back in.
And the key, folks, here is what Steve's explaining, is think for yourself.
Yeah.
That's what this is all about, okay? If you actually take it and look at it. Because let me tell you, something else just came up even in our conversation.
Yeah.
If you ever realize, like when you're saying something and you get all this peer pressure, and the peer pressure, what I'm talking about in this particular case, I can be out with people, I know everyone's lying, and say, well, I think the market's going to go this way, right?
Sure.
Well, what ends up happening, of course, for a few minutes, things get quiet, do you know what I mean? Yeah,
and then, for sure.
So picture this, a couple of years ago, right, we're sitting at a table, you're having dinner, and, this is going on, and this person's known me about 10 years, and they say to me, he says, since I've known you will just trade anything. I says, well, okay, now let's talk about that. I says, because that's what you're supposed to do. What brought you to something that you take something and you're never going to sell it? It's like, what are you, crazy?
That's right.
But let me tell you something. That is alien.
Yeah.
That, you buy something to make money, you go on to the next one. Folks, there's plenty of places to make money.
Absolutely.
You know what I mean? It's like, give me a break. Steve Rhodes, Tom O'Brien, all you tigers and tigresses, we appreciate you being out here. The Dow's up 15, Nasdaq's down 2, S&P's are flat. We're going to be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. Right now, you get the Dow up 16, Nasdaq's down 2, S&P's a flat, and you can expect, folks, this market yesterday couldn't handle it. Couldn't handle highs.
Yeah.
We're going to go after the B point, which is 1266. And if we get 850 million, it's curtains. Well, when I say it's curtains, it's not curtains. It's going to go, the projection is like 1180, which takes out the December lows. And then if you do that, then I can get the projection down real quick to 825. Watch how this goes. 12, it's amazing. 1202.
Yeah.
You take the high of 1422.
Yeah.
220 points.
Yes.
Gets us under 1,000.
Oh, okay. Okay. Off of the
cash
October.
S&P.
Okay. Yeah. I love it.
Oh man, I'll tell you.
So kind of interesting yesterday. Had a big downtick.
What did? Yeah.
At about 2 o'clock, about 2:03. I had
minus
that up on
1410.
my screen. Yeah. I had minus 1,500 on my system, but close enough.
Right.
So which was kind of a large, huge. It was the first time, in this entire largest downtick that I've seen in the entire move down, which was kind of interesting.
And particularly, folks, because it was only the first day.
Yeah.
There's no doubt. So what that means, now watch what that means then, okay? Because what you have here is that as we approach that low on the 4th, right?
Right.
I mean, it very well could stop in its tracks and then consolidate more. Because what happens, folks, is that downtick was projecting fear, okay?
Yeah, exactly.
Fast-selling fear. Now, the way it works, And in fact, I'm going to be doing that workshop inside the Tiger Dollar promotion, benchmarking volume
cool.
with the trend and the tick.
Yeah.
Okay. And the way this would work is this. Within 5 days, 5 trading days, you get another down tick like that. But what you'd also need is a rejection of price with lighter volume.
Yeah.
So
and we'd also need the trend, right, to be at what
that you would like that.
Plus 12, but 10.
Plus 12 would be beautiful.
Yeah.
But we had
yesterday was pretty good. Yesterday, no question. Yeah.
You had a 267, and if you get a closing one over 3.5 simultaneously. Yeah. And you see, what we're talking about, folks, is this: is that when you get into bottoms or tops. Bottoms in particular, to me, are basically a lot easier. And the reason being is that the fear is extraordinary.
Yeah.
The downdraft, the energy's already happened. The market itself, it's going to be going into something, and if it doesn't have the volume, it loses its energy.
That's right.
And then you see the tick explode. And what the tick specifically means is this. It means that when you have a minus 1,400, it means that within 1 minute, you had the amount of downticks that were going in the NYSE minus 1,400. Now, that's after you take the ups versus you're subtracting the downs, and you're only dealing with NYSE. I think we're dealing with probably liquid-wise. You're only dealing once. Oh, here, let's see.
Okay, let's actually show it.
Yeah.
Okay,
yeah.
That's
liquid-wise, what we're going to do is this. Okay, so right now. Okay, so picture, we have NYSE market cap, base value of 5,000. Okay, so right now we're dealing with 1,896.
Okay.
So you can imagine when you get a minus 1,410.
Yeah.
Okay, because that's you take the add and subtract and you simultaneously do it.
Yeah.
Okay. That is pretty intense.
Which it is, yeah. Because you're talking within 1 minute.
Within 1 minute,
75% of the stocks all trading down.
That's right. And so imagine, and this is what's really cool. We always talk about we're all one. We're definitely all one.
Oh man!
No matter how this is,
it's a herding mentality.
No matter how this is wired, folks. Okay, we're wired up.
Oh,
totally.
It's a herding mentality. Just think about it like this, folks, because everybody's done this, right?
Yeah.
You decide you're going to go check out maybe some new restaurant,
right?
And you walk up, or you're walking first. You kind of you look at the parking lot. Maybe it's not so crowded. You look in the door, and you're like, "Nah, I don't think I'll go in there."
Right.
Or maybe a retail store.
Right.
And you walk past, and you're walking down the mall, and you see nobody in the store.
Right.
But the stores that have more people in it.
Right.
Boom.
Yeah.
You want to do it,
absolutely.
And take a look at the Apple store. You walk past that, always full of folks, and you still walk in there just to it's a herding mentality.
It absolutely is, man. There's no doubt about that.
And it's just kind of built into our psyche.
It is. No, it is. It is. So as we get down to those levels, we'll see. What's cool about it, this is what's really cool about it, folks, is that you already know what the number is.
Yes.
You know what the S&P number is. You know what the volume characteristic is. And if you get lighter volume, good. You close out your shots there, wait for another bounce, and
no volume today.
It's the summertime.
It is.
Get your shots on, baby.
It is the
Steve Rhodes, Tom O'Brien. You stay right there. We're coming right back.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. Right now, you get the Dow up 15. NASDAQ is down 4. S&Ps are flat. And listen, folks, over at TFNN, we started a promotion yesterday, the Tiger Dollar promotion. The way this works is that from yesterday until a week from this Friday, we have Tiger Dollars. And Tiger Dollars, folks, never expire. They're totally transferable. You get a bonus. If you buy $500 of Tiger Dollars, you get $600. If you buy $800, you get $1,000. If you buy $1,150, you get $1,500. So it's a 20%, 25%, and 30% bonus. That is money spend whenever you want without expiration and transferable. Now, what we've done here is this. All the hosts have got together, and every host is doing a 90-minute workshop. So if you buy the Tiger Dollars, you're going to get over 10 hours of education absolutely free. The education starts the Wednesday after July 4th. And our man, Larry Pezzavonta, is going to kick it off.
You pulled them in yesterday.
Yeah.
You pulled them in live.
Yeah, pulled them in live. Larry Pezzavonta was in-house yesterday morning. He's going to be doing Trade What You See, Not What You Think. That's going to be on July 11th. Ken Shreve's going to be Finding New Market Leaders. That's going to be on July 18th. Our man Steve Rhodes, he's going to be
teaching the money management aspect, really the money management aspect, but teaching people how to put together, it's what I call system expectancy.
Which is
to me, that's really about being able to have certainty in your trading, and that way, because it's really all about confidence.
It is.
Trading,
and money
management. It's all about being able to have confidence. So I'll show people how to have certainty in their trading.
And then I'm going to come up the next week, and I'm going to be talking about benchmarking volume and the tick and trend index. And what that's going to get you is understanding how bottoms come in and how tops come in.
Timely.
Big time. Yeah.
Timely.
Kate Stalter's, that's going to be on August 1st. So Steve's going to be on July 25th. I'm going to be on August 1st. Moving averages with Kate Stalter is going to be on August 8th. And in fact, Kate is going to be coming up next right after Steve and I. Then our man Basil Chapman's going to be on August 15th. The Chapman wave identifying buy and sell signals, and then David White. David White's going to be on the 22nd, trading like a machine. So you get all of those webinars absolutely free, folks, which is over $1,000. So check it out at TFNN. If you have any subscriptions at TFNN, the bottom line, folks, it totally makes sense to use Tiger dollars versus your credit card. I mean, that's what it comes down to.
Yeah, that's great. That's a great program. So, Jamie Dimon, when's he on the Hill?
Oh, this is going to be dynamite. You know what's amazing, folks? The deal out here is that you hear this on a continual basis. That you hear, it's hard to know what the difference between a hedge is and a proprietary trade. And that's an absolute lie. Yeah. That is absolute lie. Yeah. Okay? It's over the top. Well, the bottom line, if you look at the Wall Street Journal this morning, their hand is caught in the cookie jar. And it's caught in the cookie jar in a huge way. 2 years ago, they have internal memos now that bottom line, these guys are trading their brains out. Yeah. And they were down the tubes 2 years ago. Yeah. Okay? This trade has been going on, and what was supposed to happen, they were supposed to pull back from the trade. You know what they did?
Doubled up.
Pushed it. And the key here is that they pushed it, and if you ever worked inside a bureaucracy, bureaucracies can do that, okay? But that means that the supervisory deal was not there. Yeah. And they're always claiming that he's the big supervisor. Bottom line, folks, he's been lucky. Yeah. And JP Morgan, that's what it comes down to. Because when you're putting on trades, okay, what does happen with banks is this. Banks, folks, get their head wrapped around the martingale system.
Yeah, exactly.
And the martingale system works like this. If you have unlimited amounts of money, you have to make money. You cannot lose money. Yeah. But that means it's unlimited. What I mean by unlimited, if we just do red and green, okay, bet green, that comes out red. Bet green comes out red. Bet green comes, and they keep doubling the bet. That's what the martingale system is, folks. Yeah. And what ends up happening, which the banks have that we got to stop, is that they have us as their backstop. Yes. And why wouldn't you do that?
That's right.
Why wouldn't you? Give me a break. Wouldn't you love that? You go home to your wife, hey, honey, I lost again today, but you know what? The taxpayers are going to give me more money tomorrow. I know that green's going to come up.
I love it.
I mean, it's amazing. And that's what they do. That's what they do, folks. It's crazy.
What I thought was kind of interesting was just the, was the sound bites out there somehow that it's related to a currency trade. and I was sitting here saying, now, wait a minute. If that makes no sense. From the standpoint of Dimon saying wasn't sure when they were going to be able to get out of the trade. Right. If it was a currency trade, folks, you're talking about being able to get out in a second.
They're so full
in a heartbeat. So I'm more curious about where's that coming from.
Yeah. They're just
and if it is a currency trade, I want to understand what that is that they can't get out of for a couple of years. That doesn't.
They can get out of it. They can get out of it right now if they want to. Yeah. They're like they just don't want to take a loss. Yeah. That's all. Well,
that's a different thing then.
Exactly. But and they're never going to own up to that. Yeah. They're never going to own up to that. They're going to claim that no, I can't get out of it. I can't. There's no such thing as I can't.
Yeah, that's right.
I mean that is
sure.
Get that thing out of your language. They never should have put that inside the English language.
I agree. Well, I can.
I can.
I can, baby.
I can, and I will.
That's right.
Oh, yeah.
I will.
Okay, look at this market.
So
folks.
Michael Kors, we were talking. Michael Kors came out with some good earnings, I believe, and was selling off at least. Let me take a
it can't handle the higher price.
So it's now only up $2,
and what you have with Kors here, if you're looking to buy it. Great, but you know what? Buy it at that gap. That gap is $33. It's at $40. It got down there last Friday. It got that $35.50 in the gap, and it's still, right now, it wants to go back in the gap right now. Yeah. It'll probably be back in the gap by the time the market's over today. So it hit a high of 73. And that is a company that's making money.
Yeah, selling lots of purses and shoes to all the women out there.
It's amazing. I remember when this first came out, and Carol, Angie's girlfriend, right?
Yes.
So picture this, folks. We're somewhere, and I don't know, 3 or 4 years ago, she comes with these Michael Kors, and then of course all the women needed those Kors like right away.
Yes, of course. It's that hurt. I mean, in a good way.
No, it is. It absolutely is.
Mentality.
It absolutely is.
Okay.
It just cracks me up, like going forward 5 years, that now he was selling so much of it. That was in the beginning. I think maybe it was 7 years ago. The time goes so quick.
Yeah.
But bottom line is that when I saw what happened there, I said it's really interesting, man. I mean that's how it does go. There's no doubt about it.
And what they charge for those for their products,
right?
Because high margin deal.
Oh, and folks, now Steve has been to Asia. I have too, but I think you really have to have been in Asia to understand how inexpensive you can get things made. That'll blow your mind.
Yeah, absolutely.
I mean, tennis shoes. Okay. How about 50 cents a pair? Sell them for $100.
Yeah.
That's not exaggeration. That's what you're talking. You're talking that kind of bread.
Big time. Look, when in the crystal business that I was in,
right?
When I started that business, all the product that I was buying from the United States,
right?
And for a little block of crystal, it was maybe about 2-inch cube or what have you.
Okay.
In the United States, I was probably paying pretty close to $20.
Right.
By the time I finally what was really great was I got approached through an email from somebody over in China that was in the business.
Right.
I checked them out, and I had a business partner of mine over there go visit them.
Okay.
Make sure that everything was legit.
Yes.
And sure enough, it was. My price came down from, say, $20
right.
to about $1.
Wow.
And
that was a good email.
Oh my God! All that, folks, went right to the bottom line,
right?
Which made things so much easier.
It was already priced in.
Yeah, everything was already priced in. So
right.
It was just a reduction in cost.
Amazing.
Eventually that ended up flying. Going. What that allowed me to actually do was then to get into the wholesale business, because at that stage,
right.
I was only
cool.
in the retail business.
Okay.
But because the product prices were so high in the wholesale business, that's where it's going to have to be marked up by at least a couple of steps along the way. But also it allowed me to get in the wholesale business,
nice.
And that was like, wow,
whole different ball game, bigger orders, everything.
Oh, totally. Yeah, exactly.
That's a big
we were doing orders for Ford. We did all the orders for their Ford truck division for years.
Oh, nice.
Where they would give out awards every quarter.
That's right.
For sales. Sales awards or what have you.
Right.
And so that was a
huge.
They just gave us the names. We did everything, the fulfillment, everything.
Right.
It was a cool deal. And you're talking thousands and thousands and thousands.
Right, and that's an operation.
Going on.
No, big time.
It was beauty.
Big time. So, Google. Let's take a look at Google. A couple of targets want to look at Google here. Now, what you have, folks, is this. It's not only going after a B point, but the baby looks like it's going to blow it away. We did 1.2 million thus far. It only needs 3 million. And let's see.
So I guess some of that might have to do with Apple pulling the. Although I don't know what were they charging a fee for Apple for the Google Map thing? So is that really a big deal?
I don't know. With Steve saying they're going to change from Google Maps to TomTom Maps. Bottom line is that no. Google runs. Google is a verb now, right? It's
it is.
You know what I mean? It's like that's not going to change.
Yeah.
I think it wants to go lower.
Yes.
If we pull this up and we look at where it's setting up. Okay, so let's see. We're at $5.99. Yeah, $4.90's game. That's not the end of the world. And when it gets into $4.90, $4.16. Oh wait, see this? It's getting really interesting here. Oh, watch this.
It's filling the gap from October 13th on the daily.
So watch this. Well, it has quite a while to go down before that. But Google looks to me. This has been in distribution for quite a while. You could I can make a case you go all the way back to 2006.
Yeah.
Isn't that weird?
Yeah. Well,
and what you have here, folks, you go back to 2006 on a monthly. It's like that, that 390, 475 level is where Google should be trading. So that's where it's going to go. And now Apple is going to get interesting because Apple just can't get that traction on the upside.
Yeah.
Now, the way this works, folks, is that the longer that, just think of that as that top is getting heavier and heavier and heavier, right?
Yes, for sure. Okay, yeah, absolutely.
That's what you have happening here. So yesterday, was a big day. Apple had wide price spread. We'll see whether that continues today or it just rejects it at this level. But
yeah, and I think on the daily chart on Apple, you do not want to see it get below the $495 area,
right?
Because that's really the last sign of significant strength out there. Not only when it goes on the weekly basis, but certainly on the daily, you don't want to see it gets. Now, it depends on which side of the market you're on.
Yes, no doubt. And this.
Well, that was interesting, gold too, because yesterday we were talking about taking a look at, is this thing really just been building cause,
right,
to really bust through those 1535, 1523 area.
I know. And then that's why I want to bring this up right now. I love you.
It just makes sense that it is.
No, I know. I love that.
Especially with King Dollar.
Yeah, see, that break, folks, what would end up happening with gold here, this break is serious, man.
Yeah.
And that break of that trend line is no doubt serious.
Yeah.
Because if you take a look, if we take a look at our own S&P, folks, all as the S&P did. Now watch this. I'm going to put the cash S&P up. This will blow your mind. I'm going to put this up at a maximum. Oh, I didn't even have to do that. This is even better. No, let me get that back. I'll put it in a 5-year monthly. What you're going to see is that all of this is done for 2 years. This is the second one. You had the first break.
Yeah, right.
Then you get the second break, and when you see this is crazy. That line's wrong. Okay, put one more instead. Make it. You're gonna see that as all it did is test the top of it.
Yeah.
And now, bottom line is that it can't handle it. When you can't handle it,
absolutely.
Lower prices on the agenda, man. Unreal. Let's go to Bill in Sarasota. Hey, Bill, what's going on?
Hey, good morning, Tom. Good morning, Steve.
How you doing, man?
I'm hanging in there.
Hanging in there?
Both hands.
Hanging in there? You should be saying I'm great. I'm alive and kicking, baby.
Yeah, well, that's the truth. I'm on the right side of the grass.
That's right.
You don't want them throwing dirt in your face.
The reason for my call is the TZA. I was in it. I got out, and I've been waiting to see if it'll come back to that April 19th, 39 million. It's a high of 1985, and I didn't know what you guys' take was on it.
Okay, so let's take a look at it. You get the TZA. The TZA, folks, is the direction 300% inverse correlation of the IWM, the Russell 2000. So, when I take a look at the Russell 2000, it's like the 74.67, is where that gap wanted to get filled. It's like I hit 74.78 this morning.
Okay.
You have, if it closes, now here's the second one. Now, right now, it's over 75.01. What you could do is this. You could just wait for that. See the 75.01, which is June 1st, right?
Right.
What you have there, folks, is this. That's where we broke a B point, and it's a complex ABC structure on the way down. Now, if it closes over that today, that's saying that, hey, you know what? That 78 is game again.
Right,
it can get up there. If it closes underneath that 75.01, you can pull the trigger, man. Because that would be saying that, no, it's going to, the ABC down is still in place, and very more than likely is a much larger ABC down.
All right, Tom. I'll lock and load. Thank you.
Cooking, brother. Steve Rhodes, Tom O'Brien, we appreciate you growling and prowling out here with us, folks. We have the Dow right now up 47, NASDAQ up 4, S&P's are flat. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Don't forget, folks, if you do have subscriptions at TFNN right now or you want some in the future, we have the Tiger Dollar promotion going. You get a huge amount of education absolutely free. All the details on the front page of TFNN. Now, coming up next, folks, we're going to go to beautiful Santa Fe, New Mexico. We get Kate Stalter coming up with the low-price leader. She's going to be growling and prowling with you. Then we're going from Santa Fe to Chicago. Victor Jones from TD Ameritrade with the option hour. Then all the way to Thousand Oaks in California with Ken Shreve, 3 to 4, and then back here 4 to 6. Tuesday's a dynamite lineup, man.
Oh my goodness!
We go right across the country.
You bet. Yeah.
And you know what we're going to be doing, folks? Daryl Martin. Daryl, we're just so busy, but Daryl, we're getting him set up.
Yeah.
And he's going to be coming out of Texas, and he's going to be doing a program at least 2 days a week, maybe 3. We'll see how that's going. But that's going to, we get a lot on our plate, but we're working on that right now.
Cool.
So that's going to be good. So we got Santa Fe, we get Chicago, we got Phoenix, we got Dallas we're going to have, we get Tampa.
Get California.
We get California.
Southern California.
Okay, and we want you.
That's right.
Oh, that's right. When are we going to do the bond out? We got to have one of our Tigers do the bond out. That's
I
right.
like that.
And then we got to do the real estate show. That's the bottom line.
Yeah,
you know, I've been trying to figure. I got to incorporate all of that. We're going to do that. We're going to do that. Why not?
Sounds good to me.
Right. You know what's wild, folks, is that when you this is cool depending on where your learning curve is in the investment business. I remember first, just 1980, just in general, saying, man, how do you get to, you know, and in 80, folks, what was ended up happening is that, you know, the currencies, they were all different currencies. So you were always trading different currencies. I wasn't trading currencies. I was trying to figure out, what the heck do these things mean?
Oh, absolutely.
Do you know what I mean?
For sure. No, for sure.
And so it's funny. What I learned is this. What you want to do is you take one segment at a time.
Yeah.
You know, you take one segment, just take your time, you learn that, you go to the next segment, you learn that, you go to the next segment, you learn that. And then it really starts coming together, you know. But when I think about that, it says, oh, man, this is interesting how it works, you know.
Well, it is. And because, you know, all of us, when we first take a look at something, it looks a little foreign.
Yeah. Totally.
You know? And you're just kind of like, okay, it's just like the Rubik's Cube. You want to just learn how to be able to put it together.
Exactly.
So, and that's where all these great patterns come in. You know,
they do.
A, B, C, D patterns of Fibonacci or what have you. So it's all great stuff, and it's all the reasons that people, you know, should take advantage of 10 hours of training. That's one of the coolest programs that you've put together.
This is no doubt, folks. It is the best program put together.
Yeah.
I mean, because the bottom line is that you have 10 hours of training, absolutely free. You get a bonus in the Tiger dollars, and you can use them without an expiration date, and they're transferable. You want to start giving them as Christmas gifts, birthday gifts? Good, no problem. We love it. Do you know what I mean?
Yeah, absolutely.
It's out there. Look at this market. Market wants to climb.
Yeah. So,
what are we looking at there?
Well, Great Basin. On May 6th, did it really trade from 59 to 77 cents?
Let's take a look. We get Great Basin.
I got a bad tick in there.
50.
No, you got the same tick.
That tick.
I hadn't even.
Yeah, you know what that tick was, though? That I believe that tick. Well, no, I can get that tick. Let me just see. That was the opening tick, I believe.
Oh.
9 days.
That's quite a bit of price spread on a 70-cent stock. 20 cents.
No, totally. It's hard to tell. No, it was there. It was there. That was a large sell. That was a large sell. See, that was a large sell. So the bottom line is that's lining up for a buy, though. Because what you just have here, at the open here, you hit the 62 cents, you're going into the 59, and you just did that with 287,000 versus 700,000, and there's a gap on there, too. See the gap? The gap is at 62.
Yeah. Kind of interesting.
Totally. You stay right there, folks. We have the Dow up 44, NASDAQ up 3, S&P's a flat. Kate is going to be coming right back with you.
Take care, folks. See you tomorrow morning.
Have a great one. Have a safe one. Thanks for being here, folks.